Hey, welcome back everybody to the channel. I am your host, and if you're an Ethereum believer who is waiting for that magical ETH approval from this video is for you. The reason why it is the most important video I've made so far is because of what we are about to see happen in the next few weeks. It will be historic for the entire crypto industry, and more importantly, it's going to be life-changing for those people who are able to take advantage of it. So let's get started right now with today's video. What BlackRock just filed changes everything. What does that mean exactly? Well, the world's largest asset manager has just filed for an Ethereum ETF. As you can see here, the document states, an application has been filed with the United States Securities and Exchange Commission for an investment company registration statement under the Investment Company Act of 1940. This is a registration statement relating to the MSCI US Large Cap E-mini Index Fund, which seeks to provide investment results that correspond to the total return of an index called the MSCI US Large Cap E-mini Index. And then down at the bottom, you can see here, Exhibit 24 Exemptive Relief under Section 6. 1 of the Investment Company Act of 1940 and Exhibit 25, a letter requesting that the Commission exercised its discretion to exempt the fund from certain provisions of the Act. You may say, hey, these exhibits were also included in the spot Bitcoin ETF filing, but there is one key detail that they have added in this ETH ETF filing that was not present in the Bitcoin ETF filing, something that changes everything. And I want to show you exactly what that is, because once you understand it, you will see how this could be life-changing. Now, before we dive into what's about to happen and what that means for you, I do want to go over a couple quick points. Point no. 1. This is a big deal because it's the world's biggest asset manager who is getting involved in crypto. In addition to being the world's biggest asset manager, BlackRock is also the largest provider of financial data products and services to the global markets. They're everywhere, and their involvement in the crypto industry is just beginning. Remember, it takes time to build out infrastructure, and that is why the spot Bitcoin ETF took so long to get approved by the SEC. BlackRock was very busy laying the groundwork, getting all of the necessary pieces in place, and making sure that everything was perfect before they would file. Point no. 2. This is also a big deal because iShares is a brand under BlackRock that specializes in ETH. They currently have 873 ETH. That makes them the second largest provider of ETFs globally, behind only Vanguard. If you haven't heard of iShares yet, you will soon enough. Point no. 3. According to Bloomberg, the shares would track an index of Ethereum futures traded on US exchanges. So there's no doubt that this is a big deal. And when you add all three of these points together, you realize that this is going to lead to an avalanche effect. Once one domino falls, the rest will follow. We are seeing this play out in real time. And like I said, the effect will be life-changing. Let me explain. The first thing you need to know is that there are different types of There are physically backed ETFs, where the ETF provider buys and holds the actual underlying asset. In this case, it would be ETH. Then there are the types of ETFs that we have right now for Bitcoin, and that would be a futures-based ETF. Instead of buying and holding the actual Bitcoin, the fund buys and holds Bitcoin futures. Contracts. Futures are derivatives, and a derivative is a financial security whose value is derived from an underlying asset, which in this case would be When you buy a derivative, you are essentially placing a bet on what the price of that underlying asset will be at a future date. Now, the benefit of having a futures-based ETF is that it allows the fund to achieve a higher level of efficiency and lower fees. It also allows investors to gain exposure to digital assets without ever actually taking physical delivery of the assets themselves. The second thing you need to know is that the SEC has been much more lenient towards approving futures-based ETFs than they have towards physically backed ETFs. Many believe that the SEC is simply delaying the inevitable, that a physically backed ETH ETF will eventually be approved. But I do want to think anyone can deny the fact that the futures-based ETFs are starting to pile up. There are so many of them right now, it's hard to keep track. This includes the recently launched Bitcoin and Ethereum futures purpose investments, as well as the highly anticipated launch of the Bitcoin and Ethereum futures ETFs from Fidelity. All of these are great options for investors who want to gain exposure to digital assets without ever taking physical delivery of the assets themselves. And now with this latest news of BlackRock's iShares filing for an Ethereum futures ETF, we are approaching a tipping point. And it doesn't stop there. Another shoe is about to drop. A major cryptocurrency exchange is rumored to be planning to launch a physically backed Bitcoin ETF in the United States as soon as next month. According to Bloomberg, the exchange is working with regulators and plans to file with the SEC. It is believed that this move is part of a strategy to attract more institutional investors and to help make crypto trading more mainstream. So why is this happening now? Why is the SEC suddenly letting all of these applications go through? Well, the SEC has denied dozens of ETF applications over the years. They have repeatedly cited market manipulation as the reason why they continue to deny applications. But with all of these new applications, the SEC seems to be taking a different approach. One of the reasons why they might be doing this is because they are trying to bring the crypto industry in line with traditional markets. Right now, the way things are set up, market makers can easily manipulate prices in ways that benefit them, but hurt investors. But with these new ETFs, market makers will have to provide liquidity to these ETFs, which will help increase transparency and provide investors with better prices. And it looks like this is the direction that the SEC wants to take things. They want to bring crypto markets in line with traditional markets. Another reason why this is happening now is because the amount of interest from institutional investors is just too much to ignore. The floodgates have opened. We are seeing billions of dollars flowing into crypto funds every single day. And I have no doubt that this trend will continue. And then finally, another reason why this is happening now is because the technology is finally coming together. Technology has evolved so much over the last decade that it is now possible to create with the advancements in things like blockchain technology, artificial intelligence, and high-frequency trading. It is now possible to create ETFs that are more efficient, transparent, and cost-effective than ever before. So what should you do about all of this? How does this affect you? Well, the first thing you need to do is educate yourself on the risks of investing in crypto. Crypto is a highly volatile market, and you could lose a lot of money very quickly. That being said, the potential rewards are also very high, and I believe that crypto is a once-in-a-lifetime opportunity to make a lot of money. If you are interested in learning more about the risks of investing in crypto, I recommend that you read a book called Master the Markets by Mark Reed. It is a great book that covers all of the basics that you need to know before investing in crypto. Second, once you have educated yourself on the risks of investing in crypto, you need to decide whether or not you are comfortable with those risks. If you are, then you need to figure out where you are going to buy and sell crypto. There are a lot of different exchanges out there, but I recommend that you use an exchange that is regulated and has a good reputation. Some of the most popular exchanges include Coinbase, Gemini, and third, you need to start investing in crypto. I know that this sounds simple, but it really is that easy. You can buy crypto with cash or with other crypto. If you're new to crypto, I recommend that you start with Bitcoin and Ethereum. These are the two largest cryptos by market cap, and they are also the most stable. You can buy Bitcoin and Ethereum on any of the major exchanges. All right, everybody. Thank you for watching the video today. I hope that you enjoyed it, and I hope that you learned something new. If you did, please smash that like button and subscribe to the channel. I post regularly, and I never want you to miss out on a video. Have a great day.